Well, hello, I'm DayTraderRockStar, and this is a continuing series, stock trading for kids, students, and beginners. This will be the chapter on wedges, an introduction to wedges. And so far, in video number one, we've really talked about the trend lines, moving averages, support and resistance, real basic stuff. The second video, we talked about channels, and now we're going to talk about wedges. Wedges, for myself, we're going to start off just a basic understanding of what a wedge is and what makes it such a great pattern to trade. If you're in the markets to try to trade the markets, it's great to recognize a pattern that happens over and over again and become very familiar with that to a point where you know where the pattern typically breaks out, why the patterns move in this way, what's expected out of the pattern. These questions, just by seeing a setup like this, is going to help in your trading tremendously. So let's start off by just taking a look at a couple patterns right here. Actually, what we call a couple wedges. I'm going to try to use a pen here to kind of give you an example of what a wedge is. Some of you might not be familiar with that. Depends on if you got to that part in school. But let me give you a better example of what a wedge is here. All right, a wedge for me is really a channel, but an uncompleted channel. And we're going to discuss that a little bit more too. But just taking a look at a couple of the examples up on the screen. And what I mean by that is we have a falling wedge right here in this area right here. I'm actually going to try to kind of highlight some of these for you. This one right here is a falling wedge, and a falling wedge in this type of environment where we actually are moving up into the wedge pattern, and then we start to kind of fall back into a wedge pattern. So this one, falling wedge in an uptrend, meaning that the market is continuing to move up here. We're just on a nice uptrend. I'm going to give you better examples of that. Any type of wedge pattern pullback is typically bullish. So this is a wedge pattern pullback that's in an uptrend, basically. Falling wedges, another way of looking at them is in a downtrend, is very bullish. And if the market is trading down, we just continue to move down, and we stair step down and move down. We can establish that trend and everything about it is facing down. If we start to see a wedge pattern develop in a downtrend, that is actually a bullish setup also. And the reason is it's a reversal pattern. Where this is a continuation pattern, when we talk about continuation, it means the trend is moving higher. This just pulls back. It's our pullback phase, and then we continue to push back higher. So it's a move up, pull back, follow through, continuation. Here we have a long extended channel, and we end up in this wedge pattern, and this ends up bouncing and breaking out. So we have a short-term trend that's broken to the upside. That's a bullish scenario, and it leads to a reversal. This usually puts in the bottom. We come back, retest, and start moving back up. So these are two different type of pullback wedges, but if one's in an uptrend, it continues to be a bullish setup. You want to take that long. Of course, both of these falling wedges you want to take long. Now, we're not going to pay attention to the bear flags. That'll be another video. But again, you can see the technique here, the move up, the wedge pattern, and the breakout. The move up, the wedge pattern, and the breakout. Now we had that falling wedge. We had the continuation wedge. And now we have the rising wedge. All right, so the rising wedge basically just the opposite of the falling wedge. In the case where we're rising in an uptrend, it's opposite of falling in a downtrend. That falling wedge, that rising wedge in an uptrend. Reversals, meaning that we're moving up. We've been up in this uptrend, and now we've gotten really tight into a wedge, and typically we break down out of that wedge. And then, of course, if we're actually trading rising wedge in a downtrend, is bearish. If we've been trading in a downward market and we actually kind of push back up in the form of a wedge, that's a continuation pattern as it was here, moving up. We pulled back and moved higher. Here we're moving down. We pulled back, and now we continue lower. So these are just a different type of wedges you're going to find. So that's just your basic understanding of what direction you want to trade out of a wedge. Now we're going into a little bit more detail on how do we determine when the wedge is going to break out. All right, so now that we have identified a wedge pattern in the market, we want to determine how do we know where it's going to break out. What does it mean? Well, I'll tell you right now, that's what makes the wedge pattern such a nice pattern to trade. typically a high percentage, what I like to call a high probability setup on a wedge pattern. It breaks out between 65 and 75% into the pattern. And what I mean by that, if we'd actually just take a, let me grab a pen here, my Epic pen. I'm just trying it out, and grab a pen here. And I'm not going to be able to draw a straight line or anything, but you see this line that goes down here that represents this wedge pattern. Well, if you follow through this, these eventually would meet down here at a point. All right, and that would be a full completion of a wedge pattern. From here, from the beginning to the end, it would be 100%. 100%. So half of that would be 50%, wherever that is. I don't have a motor out. And then about half of that would be about 75% in that zone. And between 65, between that and 65 is typically where we're going to get the breakout on wedge patterns. 65 and 75%. So just imagine the lines continue to go out, and we kind of meet, and you cut that in half. Then you cut that in half. That's your 75 area, and usually before that, in between the midpoint and the 75 area, we tend to break out of the pattern to the upside on this. So that's a great signal in itself. And there's another better signal. It's a little bit more advanced, but we typically talk about what are the other signals that help us determine, well, consolidation or a double bottom. And we talk about double bottoms, just kind of holding support there. Once we start to see support held, and you have that pattern here, most likely you're going to break up and move back up out of this pattern. Now, I know it's this very sloppy pattern. We'll take a look at some other charts here. All right, let's just we went through these. Again, here's a good example of that falling wedge pattern and that breakout. You'll notice most, really good falling wedge patterns. And of course, if you're not going to, the one thing you could say, well, if it doesn't work out and it looks like a falling wedge, you wouldn't be showing it. Most of these will show up. There will be on occasion a new market news, something that's overhanging the market that might cause things to break down. Typically, it's news, or typically it's a break of support, break of resistance that pushes things beyond the boundaries. But when we talk about high probability, that's what you want to be able to know what's going on at a certain time. So the wedge pattern is giving that. It's giving you that 65 to 75% area to trade off of. Very easy then at that point to start to monitor it and start to see if we start to get that move up. Even the breakout sometimes could be bought on that. But personally, if you'll recognize a nice little wedge pattern, I'll show you some examples. These are from my live charts. When I see wedges, I love them so much, I tend to copy them. Sometimes before they break out, sometimes just to give you a feel. I have a few. I'm just going to give you examples right now that kind of help you realize that. Now, this is what we call the E-mini futures, or trading the futures. A little bit different from trading stocks, but these patterns play out on all different type of trading vehicles. And what I mean by that, you'll find them on stocks, you'll find them on currency or forex, commodities, anything that you could actually see the history of the price, and you can put those candlesticks in. You will see pivot areas where a market will move up and then move back down, and you will start to be able to connect those with trend lines, and those trend lines will eventually connect and give us those wedge patterns. And from those wedge patterns and understanding how they work, we're able to predict that this is going to break back down, and we're going to look for a trade to the downside. We also want to know, when we do recognize that pattern, what's the best place to get in? The best place to get in is on a falling wedge is the lower trend line. All right, and there's other keys that we pay attention to. Maybe if you have an indicator that you're using, be it MACD, relative strength, or in my case, I use a stochastic oscillator. I want to make sure we have that stochastic setting up as we have that lower trend line, that wedge pattern setting up, and then sometimes we wait for that confirmation candlestick to play out. Now, these might be a little bit more advanced terms for you, but the wedge pattern, hopefully you're gaining some knowledge on the wedge pattern and just the direction that you want to take on a wedge pattern. That's the important thing. These are high probability patterns, and once you start to see them set up here, here's a great example. Again, rising wedges typically break down, but there's always, you have that rising wedge in a topping formation. You have that kind of pullback wedge, rising wedge in this continuation pattern. And the same thing on the downward or falling wedge pattern. We have this move up and the falling wedge pullback and the continuation, and then we have this bottoming pattern, which is eventually just formed a wedge pattern. We reverse off of that. So just a great some examples right now. I think we went over that. You can see actually here are the futures. I do a lot of trading with the futures, so we see these patterns play out constantly and like to identify those. Rising wedges break down, falling wedges break up. You will have occasions if there's news that you can break out to the upside, but that is that is what makes this pattern so good. It shows up over time. You're able to identify it very easily, be able to trade it using some of the other indicators. One thing I will say, double bottoms and a term that you might not be familiar with, divergences, work great with wedge patterns. So once you establish a wedge pattern, you see a divergence, which is here. That typically gives you the signal that you're going to break out of that wedge. It's one of my go-to trades when I like to trade the wedge pattern. Well, just running through some examples of how these wedges look. You'll see them all the time. That's why they're good. And you see the direction. Here's a good one that actually broke out of a wedge pattern to the upside. That's what we're looking. This one also gave you that divergence setup. The lower low on the price, the higher low on the oscillator, and a very good thing. And again, we left off with this one. Intraday, 1 minute charts, 5 minute time frame, 60-minute time frame. Each candlestick representing the time that it takes to form. So that much data. It'll show up on all these time frames. Important pattern, a great pattern. Hope you enjoyed the video. If you have any suggestions on what you would like to hear in the next video, flags are very similar to this. They have the same technique. Oh, the one thing I did leave out here, a little bit more advanced, but let's talk about it fast, is a measured move. Another great thing about a wedge pattern is that when you trade a wedge pattern and the wedge pattern breaks into the direction that you want it to go, it's very easy to calculate how far that trade is going to go. In this example, whenever I have a wedge pattern, most stocks trade in channels. So when I see a wedge pattern, I consider that maybe a half a channel formed. And what I do is I take that the top trend line in a rising wedge, because we know that's going to break down. I make a parallel line and I drop it down to the low and extends it out. And what happens is we typically break down to that zone and bounce. It happens over and over and over and over again, constantly. And it's a fantastic thing to watch. So that's how we do measured moves. Again, we take let's see if I have another example. Here we go. Just in case, and just on this one, I don't have to follow through, but here you have this nice little wedge pattern. You would take your entry down on the lower trend line. You had some of the other indicators lined it up. You get a confirmation candle, and you drop a parallel trend line. Here you have the lower trend line. That's the one you're counting here. So you make a parallel trend line, put it up at the top here, and you just drag that down. The price, once it gets back up to that zone, completes its full channel, which typically are these that they trade in these channels. So you want to use that as a gauge for taking profits. If I would extend this down one more time, let me see if I can do that for you, just to give you one more look at if this is that top trend line of that rising wedge, and if I would just take that parallel line, it would be just down there from that one. It would come down. You would use that line to bounce back up and start to trade off of this. So any type of rising wedge like this breaks down to the parallel trend line, bounces, lots of times retraces and follows through. Again, a short-term trading technique, but really based on what time frame you want to trade it. All right, so that's going to be it for this wedge pattern. I don't want to get too advanced on this, but if you have any questions or any video suggestions, please you can ask them here on YouTube, and if you or you can email me at dtrs@daytradingradio.com. All right, have a great night, and we'll see you in the next segment.